Welcome to another exciting episode of The Trading Bell. This week on the show, we shall be dissecting into what to expect in 2021. We'll be speaking to a set of panelists who will be navigating for us what will be big in 2021 and what to look out for through the year. Let's take you now to that discussion. Allow them to introduce themselves. Let me go with the ladies first.
I'm Emily Keegan, Clearing Operation Analyst at the NSC, and my outlook for the year, with the blessings of the rain in January, the positive outlook.
All right.
Yeah.
Very simple. Mr. Kishori.
My name is Samuel Gishohi. I'm the head of business development at NCBA Investment Bank, Brokerage Division. I think I'm a perennial optimist, and I believe that any downturn, what goes down must come up, just like what goes up must come down. Yeah. So I think this is about time we started to see a recovery here.
Interesting. The law of physics. All right.
My name is Sarah Wanga. I'm the head of research at AIB Access Africa, and I'm positive about this year. Last year was negative for the markets, and so I see a recovery in the equity market and fixed income space.
All right.
Yes.
Well, ladies and gentlemen, it seems like everyone has this narrative that 2021 will be a better year. You could clearly see it how Kenyans celebrated the end of the year, saying we are ushering in a new year with lots of expectations. It seems like 2021 has a lot to offer. Let me pick your mind, Gishohi, especially considering how the past year was turbulent. We did see companies reporting losses. We did see companies downsizing their staff. And right now, is the same situation going to abound?
Well, I think what we're seeing is the feeling that the worst is over. I mean, hope is what keeps the human race going anyway. Yeah. And that said, COVID-19 was unprecedented in terms of its impact. It was something that we have not faced in this generation. It was something that affected everybody globally. That was on a global scale. And so it means that we are living in a new normal. Everything changed in an instant. I usually say, I think God pressed the reset button. And so we have seen that companies have had to change a lot of the way they do things. Things like working from home, things like remote, meetings, etc. I'm sure even in the press you've had to change a lot of things. Definitely. So I think the companies that are dynamic will survive this. They've already had time to learn, which means that now 2021 will be when they actualize those strategies that they have now set up. And so the expectation is that we are going to see now improvements, maybe some failures which we learn from, etc. But again, we've seen a lot of profit warnings in 2020. The expectation is that now that there has been all those restructurings, as you've said, companies have let some staff go, there's restructuring of the way they do business, then naturally it means those reactions, if they were done right and at the right time, sure, means that those companies should at least improve their bottom line by reducing, say, on costs, staff costs and other overheads. So that is a good thing and a good expectation for 2021. Right. Of course, we don't expect to see a good dividend year, considering last year was not good. So we can't expect them to go back to the normal dividends, given that, of course, we have had also the profit warnings. But at the same time, since prices are very low, chances are, as we see foreigners and local investors starting to come back to the markets, then we could see a rally that will make the dividends irrelevant anyway.
I don't know if, Sarah, you agree with it. You did touch on recovery is near sight. What will lead to this recovery, really?
So we'll probably see an inflow of foreign investors. Last year, there was a net outflow from the securities markets, but this year we're likely to see them coming back into the market, mainly because of the attractive valuations. So companies are currently trading at close to their one-year lows, and then there's expectation that earnings will start increasing in 2021. And as you look at banks, so a number of banks are likely to record a decrease in earnings this year. But even as we looked at how they performed last year, looking at the first 3 quarters of the year, we saw that their core business was still intact. So interest income was growing, non-funded income was also relatively stable. They only had an increase in provisioning. So as an investor who's looking to invest in the equity market, to look at banks, you'd like, yes, this year they'll probably be hit by the provisioning of 2020, but now 2021 earnings are likely to increase because their core business is solid. Safaricom is also performing very well, and also given that there was the reintroduction of charges, so we could see their revenue increase. And so I think that will probably be one of the reasons why we'll see investors slowly come back into the market.
All right. And Madam Keegan, interesting sentiments from our panelists. I don't know, where do you stand in all this?
I share the same sentiments. I look at, and I take the analogy of a swimmer. You dive into the water, you have to find your balance, then you stabilize in the waters. Then I'm looking at the market. There was a dip towards the end of August. We see some stability, even in terms of prices. Prices still coming up on the different stocks. So I think we are at that point of stabilizing and now adjusting to the new normal.
All right.
Yeah.
And still staying with you.
Yeah.
You're saying we are in the process of stabilizing, just using that narrative of the swimmer.
Yes.
The tides in the water can also resurface again. Do we foresee a situation where the restabilization can be thrown back to the back burner?
I usually look at the biggest hit as the one that we were caught unexpected last year with the COVID coming in. No one expected it. Now that we are aware this wave is there, we are better prepared for such a wave. If it comes, the muscle is there, at least built from that first shock.
Yeah. I can see Gishoi smiling and itching to respond. But before you respond, Gishoi, we have a very interesting clip we want to play right now, where the CEO of the NSC, Mr. Geoffrey Odundo, did also share his sentiments and expectations for 2021. Let's listen to that and then we progress.
As you rightly put, there are a lot of moving parts in the economy. On one hand, government has to continue their programs of infrastructure development, of providing social amenities to Kenyans. On the other part, we have got the issue of the upcoming elections and some of the political issues that are taking place. But one thing I'm happy about, especially the political side of Kenya, I always say we've got a very strong political infrastructure. And you can see it at work. We have systems at work. The legislature, the executive, there are ways of accountability. People speak their minds, and that kind of thing. And that's very important to investors. Investors want to come to a market where they are sure that political stability is in place. There don't have fears that there could be changing policies that surprise them. And I think that's happened very well. So all these issues that we are ventilating as Kenyans, I think is only good for us. Even how to improve the constitution. I think the ventilation is very, very important. Okay. And that's a good sign. It's a good vital sign for economic growth. So I think with that's going on one part. I'm not an expert in that, so I cannot comment further than that. All right. But I do speak to a lot of investors, especially international investors, and they're very happy about Kenya's macros. They're happy about how we are managing our key areas. First of all, we are a very diversified economy.
All right, ladies and gentlemen, that is the CEO of NSC, Geoffrey Odundo, just giving his remarks as we kick off the year. And from you, Madam Mwanga, of course, very solid sentiments there when he talks about the political noise. We are going into a pre-election season where we are having a constitutional amendment moment. And it is known very well that anytime there is political activity and it overshadows economic development, we are likely to see the numbers dipping. How will this work out this year, especially now that we are seeing a lot of interest by investors, like you did say, in terms of the Kenyan market and East Africa at large?
So I think the way investors look at our political environment is not the same way most of us Kenyans look at it. And like just if we were to go back to 2013, which was a key year in Kenya, local investors were a bit afraid of investing in the equity market, yet we saw an increase in foreign investor inflows, and that drove the rally for a number of years.
So the markets are quite resilient?
Yes, they're quite resilient, yes. And foreigners might not necessarily view this as being a reason for concern. Yes, as in 2013, it wasn't a reason for concern, and so they'd look at the fundamentals. So what is happening in terms of the economy? As was mentioned, that we're a resilient economy, we are a diversified economy, and so if growth is likely to come in, regardless of the political environment, and people are confident that there'll be political stability. Yes, there might be some noise here and there, but the overall economy will grow, then foreigners are likely to come in to the market.
Madam Keegan, what are your thoughts on this?
My thoughts on the policies and even the structures put in place currently support a stabilized economy, because I look at even the rates, interest rates, in terms of towards the end of 2015, when we had our previous election, we had rates of around 15, but structures put in place right now are maintaining the rates at affordable rates, whereby even when it comes to lending, the banks are guided on what rates to lend at. So we are not seeing rates in terms of government bonds going extremely high, or even the borrowing being very expensive for the institutions.
All right. Yeah. Kishoi, finally to you.
Right. Actually, I agree with Wanga. Interestingly, if you do a technical analysis of the NSE 20 index, for the last 4-5 elections, the market has rallied in the year 2 elections. All the dips have come after elections, not before. And interestingly, we see a lot of inflows during the year 2 elections. And I think there's a bit of contrarian behavior there on the part of the foreigner. They know locals are not buying in the market because they're saying, let us wait for the election. Yeah. So they buy during that year, and then they sell to us at a high price after the elections. If you look at when we had the post-election violence, the market didn't necessarily dip because of the post-election violence. What really hit the market was the credit crunch crisis, which happened, which was external, which again points to foreign outflows. When foreign outflows happen, it happened with COVID, the market will slump. Then the valuations will become so attractive, the foreigners will come back. Foreigners coming back, of course, has a lot to do with what is happening again on the ground. They are suffering a lot from COVID than we are. The fact that we are doing much better is probably going to make them feel that this is also a more attractive destination because we don't have lockdowns. Our businesses have not necessarily stalled completely. If you look at horticulture, last year we exported more because the people who usually go to do the planting in, say, the UK from Eastern Europe did not go because they can't move. And so our agriculture sort of thrived. The retail investors, in fact, you'd be very surprised to see, have supported the market during this time. Actually, it was not expected because we thought the foreign outflows would really, but we have seen the support from the local investors. The expectation is as foreigners come back, they're going to push the prices up. And so I do agree that we are a resilient economy. We've had elections. I think the worst happened during the post-election violence. The fact that we are talking about it, and I think Jeff alluded to it, that noise is good because people are venting. See, before we were not talking about it. So when the elections happened, we started fighting. Now, even before we get into that election season, it's already on the table that we cannot afford to have such fights, and this is what we want to do, whether we oppose it or we agree with it. It just shows a stronger democratic space.